As we inch closer to this year's union budget, let's take a look at what industry experts are expecting on corporate taxation. Rohinton Sidbaus, a direct tax partner in Deloitte India, anticipates the government will reorganize the corporate tax structure to boost activity in the sector. Meanwhile, Yatin Sharma from Adidas India Marketing is urging the government to address the persistent slowdown in retail. Let's listen into their insights.
Tax collections continue to grow at a significant rate of 16% net of refunds, which puts the government in a very positive framework in terms of what they can possibly do as part of the budget. Now, if you're looking at a combination of personal and corporate income tax collections, personal collections are actually growing at a rate almost twice that of corporate tax collections, which means it's now the right time for the government to have some leeway to further look at some reorganization to spur corporate tax activities. Essentially, what we're really looking for is some sort of easier processes for corporate tax compliance, as well as, to some extent, some rate rationalization that can happen for corporate tax. One big problem with corporate taxpayers has been, unlike the individual taxpayers, most of them don't receive refunds at the same speed that individual taxpayers received. And consequently, if the government can look at process to kind of ease the refunds which are pending with a lot of corporate taxpayers and release them to them. The second area has been the VSV scheme. Just on an overall basis, the government has almost one entire year's tax collections locked up in litigation. Anything that they can do to reduce the litigation and continue to reduce the pace at which litigation gets added up would be a very positive thing for the industry.
From retail perspective, the main concerns and most important worry is an ongoing slowdown in retail sector from past many quarters. And our only expectation from the upcoming budget is to see some incentives and avenues from government, which increases the turnouts of consumer in the market. This could be anything from the expectation point of view, like reduction of personal income tax, which eventually increases the purchasing power in hands of consumer, and they actually turn out into the markets, reducing rate of interest on loans, GST rates reduction, or schemes for availing deduction on market spends, like we did at COVID times. On the other hand, since we are also coming from a footwear industry is also largely affected due to the recent BIS norms. And the process of getting BIS certification is very slow. So need some push from the government side on the expediting process, and also some incentives and avenues to lift up the footwear industry at large. Other than this, the other expectation from the upcoming budget would be GST rate standardization. It's already in talks. Simplification of Income Tax Act, like removal of dormant sections. Amnesty schemes for clearing old litigations are always welcome, as it releases stress from the industry at large. So these will be our main expectation from the retail standpoint from the upcoming budget.